Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, episode 163, published on January 23rd, 2025, titled January 2026 Sustainable Stock and ETF Picks. So, this podcast is presented by Investing for the Soul. Investingforthesoul.com is your go-to site for vital global, ethical and sustainable investing mentoring, news, commentary, information and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. I have a huge crop of 24 articles for you in this podcast. Note, some companies are covered more than once. Now, with so many articles to potentially cover, I've chosen 6 to quote from. The other 18 can be found with their titles and links on the web page for this podcast edition. The first article I'm quoting from is hot off the press and is about one of my favorite company rankings. It's titled The 2026 Global 100 List Puts Speed in the Spotlight on corporatenights.com. The introduction is by Tristan Bronca. Here's some of what he says. As the global economic transition accelerates, more companies are recognizing that sustainability isn't just good marketing, it's good for business too. This was the animating spirit of the new methodology behind the Corporate Knights Global 100 ranking. The revised methodology introduces sustainable revenue momentum to measure how fast companies are growing with their sustainable revenues. Last year, sustainable revenues and investments together accounted for 50% of the score, and the other 50% was scored across 22 common environmental, governance, and social performance indicators, such as water use, emissions, workplace fatalities, and diversity on the board and among executives. The change has reordered the deck in a big way. In terms of performance, the G100 companies are back in top form, beating the benchmark MSCI AWCI index over the past year, Toby Heaps says, referring to a stock market index of 85% of global investable equities across almost 50 countries. End quotes. Incidentally, the top 5 companies are ERG SPA, Pandora AS EDP Renewable SA, Fluence Energy Inc., and Taiwan High Speed Rail Corp. This next article brings us back to highly familiar territory. It's titled Top 4 Cleantech Companies to Watch in 2026 on carboncredits.com and is by Jennifer L. Here are some brief quotes. 1. NextEra Energy is the largest clean energy company in the world. It owns and operates wind farms, solar fields, and battery storage systems across the United States. NextEra has also increased its dividend for more than 26 years in a row. 2. First Solar is one of the top makers of solar panels worldwide. It uses a technology called thin film photovoltaic modules. These panels are lighter, use fewer raw materials, and often perform better in hot climates compared to traditional silicon panels. The company builds large solar power plants that send power to utilities and corporate companies. Financially, First Solar is a strong player. Its market cap was around $24 billion in 2025, and it has shown double-digit revenue growth. 3 is Bloom Energy. Makes a special type of power generator called a solid oxide fuel cell. These units produce electricity efficiently and with low emissions. Customers include data centers, large buildings, and industrial sites that need reliable power without high carbon output. Bloom's fuel cells can run on hydrogen or biogas, which makes them flexible for future clean energy systems. Premium Financial News reported that its stock jumped more than 410% in 2025 after strong earnings results. 4. Plug Power focuses on hydrogen fuel cell systems. Its products are designed to replace traditional batteries and fossil fuels in heavy equipment, forklifts, and industrial vehicles. The company is also building hydrogen production and fueling infrastructure across North America and Europe. This supports a broader green hydrogen economy. Plug Power has faced financial challenges, including consistent net losses and stock price volatility. Its long-term growth story depends on hydrogen demand and policy support worldwide. End quotes. The third article I've chosen to quote from is titled 3 ESG Stocks to Add to Your Portfolio for Sustainable Returns in 2026, December 30th, 2025, on Zacks.com. It's by Aniruddha Ganguly. Now some quotes from the article. 1. NVIDIA achieved 100% renewable electricity for all its global offices and controlled data centers in fiscal 2025. This Zacks rank number 1 strong buy company targets to reduce direct emissions by 50% for operations, so that's Scope 1, and electricity consumption, Scope 2, by 2030. The Zacks consensus estimate for fiscal 2026 increased a couple of cents to $4.66 per share, indicating 55.9% growth from the figure reported in fiscal 2025. 2. IDEX Laboratories, that's IDEXX Laboratories, is a developer, manufacturer, and distributor of products and services primarily for the companion animal veterinary, livestock and poultry, water testing and dairy markets. IDEX has set goals to reduce Scope 1 and 2 greenhouse gas emissions and aims to source 100% renewable electricity by 2030. This Zacks rank number 2 by company plans to improve diversity and representation of underrepresented groups. IDEX shares have surged 66% in the trailing 12-month period. The Zacks consensus estimate for 2026 earnings has been steady at $14.42 per share, indicating 11.7% growth from the 2025 consensus estimate figure of $12.93 per share. And 3. Microsoft targets to become carbon negative, water positive, and generate zero waste by 2030. This Zacks rank number 3 hold company is leveraging AI for good lab and tools like the Microsoft Planetary Computer to drive biodiversity conservation. Microsoft shares have returned 14.7% in a year. The Zacks consensus estimate for fiscal 2026 increased a couple of cents to $15.61 per share, indicating 14.4% growth from the figure reported in fiscal 2025. End quotes. This next article picks a few lesser-known, and for some sustainable investors, a few controversial companies for review. It's titled Top Renewable Energy Stocks to Watch Today on MarketBeat.com and is by MarketBeat. Here are several brief quotes from the article. 1. Quanta Services provides infrastructure solutions for the electric and gas utility, renewable energy, communications, and pipeline and energy industries in the United States, Canada, Australia, and internationally. 2. WEC Energy Group, through its subsidiaries, provides regulated natural gas and electricity and renewable and non-regulated renewable energy services in the United States. It operates through Wisconsin, Illinois, other states, electric transmission, and non-utility energy infrastructure segments. And 3 is NOV, that's N-O-V, designs, constructs, manufactures, and sells systems, components, and products for oil and gas drilling and production, and industrial and renewable energy sectors in the United States and internationally. 4. Clearway Energy operates in the renewable energy business in the United States. The company operates through conventional and renewable segments. 5. HA Sustainable Infrastructure Capital, through its subsidiaries, engages in the investment of energy efficiency, renewable energy, and sustainable infrastructure markets in the United States. 6. Ameresco, a clean technology integrator, provides a portfolio of energy efficiency and renewable energy supply solutions in the United States, Canada, Europe, and internationally. And number 7, Gibraltar Industries, manufactures and provides products and services for the renewable energy, residential, ag tech, and infrastructure markets in the United States and internationally. End quotes. My 5th article is titled Top Wind Energy Stocks Poised to Benefit from Clean Energy Transition on finance.yahoo.com. It's by Avasek Bhattacharjee and originally published on Zacks.com. In the US, the wind industry could be gaining ground despite President Trump's protestations. Here's some quotes from the article. 1. NextEra Energy is a public utility holding company engaged in the generation, transmission, distribution, and sale of electric energy. The Zacks ranked number 2 by company's competitive energy business. NextEra Energy Resources, LLC, is the leading generator of wind energy globally. 2. PG&E operates as the parent holding company of California's largest regulated electric and gas utility, Pacific Gas and Electric Company. The Zacks ranked number 2 company's exposure in wind energy stems from the procurement of power from several renewable sources. 3. Arcosa is a leading manufacturer of infrastructure-related products and services that serve the energy, construction, and transportation markets. This Zacks ranked number 2 company's engineered structures business continues to benefit from strong demand for its wind towers and engineered structures. 4. Constellation Energy is a well-recognized provider of electric power, natural gas, and energy management services to 2 million customers across the continental United States. Constellation Energy operates 27 wind projects across 10 states. This Zacks ranked number 3 hold company is launching a $350 million initiative to increase the output and lifespan of its portfolio of renewable energy sources. End quotes. And my final review article covers some old favorites. Its title is AI Infrastructure Stocks Lumentum, Celestica, Seagate beat NVIDIA 2025 on CNBC.com. It's by Kif Leswing. Here are some brief quotes. 1. NVIDIA has been the biggest infrastructure winner in the artificial intelligence boom, soaring in value by almost 13-fold since the end of 2022 to a market cap of $4.6 trillion. 2. Lumentum, based in San Jose, California, makes switches, transceivers, and other optical laser-based parts that are needed for fiber optic cables. Customers have typically been telecommunications carriers and device makers like Apple, which previously used Lumentum parts in its Face ID sensor. Lumentum's stock price has jumped 372% this year, lifting the company's market cap past $28 billion. Sales surged 58% in the most recent quarter from a year earlier to $533 million. 3. Western Digital is one of the 3 major hard drive manufacturers, along with Seagate and Toshiba. Shares of the 55-year-old company are up almost 300% this year. Data is the fuel that powers AI, and it is HDDs that provide the most reliable, scalable, and cost-effective data storage solution, CEO Irving Tan said in October on an earnings call. Revenue is expected to increase about 23% in fiscal 2026, with growth slowing to 13% in 2027. 4. Micron is one of 3 major memory producers, alongside Samsung and SK Hynix, but the only one based in the US. Analysts from Morgan Stanley said in a December note that Micron's results showed the best revenue and profit upside in the history of the US semis industry, aside from Nvidia. Revenue is expected to almost double in the year ending in August, before dramatically slowing to 24% in fiscal 2027 and less than 1% in 2028, according to LSEG. 5. Seagate is also benefiting from the booming demand for storage. The stock is up 231% this year. Sales rose 21% to $2.63 billion in the company's fiscal third quarter, which ended October 3rd. The company said at the time that 80% of its sales go to the data center market. There is no question that AI is reshaping hard drive demand by elevating the economic value of data and data storage, CEO Dave Mosley said on a call with analysts. Analysts expect 21% revenue growth this fiscal year, followed by increases of about 15% and 6% in the next 2 years, according to LSEG. Number 6, Celestica, founded in 1994 as an IBM subsidiary, makes switches that connect networks together and manage the data and traffic flowing through them. The stock is up more than 230% this year. Analysts at Goldman Sachs wrote in a note Friday that Celestica supplies parts for Google's ASIC. The company should benefit in 2026 from being the leading provider of Google TPU rack-level solutions, the analyst wrote. End quotes. Now don't forget that 18 more great articles showcasing some great sustainable and ESG-oriented companies can be found with their titles and links on the web page for this podcast edition. So these are my top news stories with their stock and fund tips for this podcast. January 2026 Sustainable Stock and ETF Picks. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these tumultuous times. Contact me if you have any questions. Thank you for listening. My next podcast will be on February 27th. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.